and welcome once again to Investor's Edge. I'm Adam Sarhan, in for Gary Kay, who's out today. Today is Thursday, July 30th, 2026, and we have a great show for you tonight. As always, I want to thank you very much for being here. A lot's happening. We got earnings. We got the Fed yesterday. We got a little rebound in the market today, and a lot more. So GDP, a lot more. I'll get into everything. Earnings from Amazon, earnings from Apple. After the close today, we had Microsoft, Meta yesterday, and several other stocks, Starbucks, Chipotle, so on and so forth. So I'll get into everything. That being said, before we do that, I got some little housekeeping. I want to read something to you quickly here and share with you. Here we go. As you know, this is a show about you and your money and all the fun points in between. Just as a quick reminder, if you don't get the show in your city, you can go to GaryK.com. You can listen live or archive. We are live Monday through Friday, 6 to 7 p.m. Eastern. Also at GaryK.com, you can follow Gary on X, formerly known as Twitter. Just press the button. And you can subscribe to get Gary's morning notes sent directly to your inbox, read his articles, or listen to the show, pause, rewind, fast forward. Or if you want to subscribe to the premium service, you can go to convictionleaders.com. Once again, that's convictionleaders.com. Now, let's talk about the market. We are in a downtrend or a little pullback, correction. The language, folks, of what you want to call it, it's semantics. It doesn't really matter to me. All I know is that when we zoom out, we're in a bull market. You look at the NASDAQ 100, it's a leading index this year. It's up around 12%, thereabouts. You have the S&P 500 up about 8.5%, somewhere in that area, under 9. The Dow, let's take a look at the Dow and see where that is year to date. Yeah, we're up about 7.8, so about 8% there. The small cap Russell 2000, is now leading because it hasn't pulled back as much. Let me correct what I just said there. The Russell 2000 up about 17.5%. If you want to round it up to 18, we can do that. So now that's the leading index. And then the mid caps is up about 12.3% or about 13%, or 12% if you round down, or 13%, somewhere in that range. So the Russell 2000, the small caps, are now outperforming the NASDAQ because the NASDAQ is pulling back. Now the NASDAQ had a pullback of about 10% from the recent high. Normally, in bull markets, it's normal to see big pullbacks. They happen. They're not fun. In fact, this one was ugly, but it's normal. And it happens. It's end of month. Tomorrow's the last day on Friday. Typically, not always, many times, I'm not going to use the word typically, many times you'll see investors, the market tends to rally end of the month. They used to call it window dressing. It doesn't really happen. So on and so forth. But, in all practical purposes, it's a seasonally, let's put it that way, period, where you tend to have a bounce, especially when you come into it, like we did this time, with a big decline. So this year, the NASDAQ 100 was the leading index. It's now the Russell because the Russell hasn't pulled back as much, but we're seeing a lot of selling in tech. Okay, if you look at the semiconductor index, that's up a whopping 44.5% year to date, thereabouts. So let's just round it to 45. That's massive. It's ginormous. Since March alone, it's up massively. It went from 359.86, which is the semiconductor index, the SMH, all the way up to 671 just a few weeks ago. And then it had a big pullback. It's down about 20% from its high. Double the NASDAQ. It's more volatile, right? You had a bigger move up, you're going to have a bigger move down. Those that, as far as I'm concerned, the NASDAQ and the semiconductor index, zooming out year to date, those were the two strongest indices this year up until the latest pullback. So, okay, we're pulling back. It happens. It's normal. Nobody likes it, but that's part of the process. And I've studied just about every single major bull and bear market in history. Every single one of them has pulled back and pulled back. Had multiple pullbacks along the way. Pulled back and pulled back again, rallies, pulled back again, rallies. Sometimes it goes sideways for months. So from my standpoint, it's really a understanding the lay of the land. understanding the language the market speaks, understanding the rules of the game, metaphor or analogy you want to use to explain it. When in Rome type of a thing, right? So, okay, if we're trading stocks, we're investing in the market can only do three things. It can go up, it can go down, or it can go sideways. And that's it. There's literally nothing else the market can do, up, down, sideways. So if you zoom out and remove basically the opinions and the thoughts and the noise and all that stuff, and you just look at what can happen up, down, sideways, all right, it puts things in perspective. And when you zoom out and you understand you're in a bull market, and a very strong bull market that is, but now things are starting to roll over a little bit, things get dicey. It's not a clean, linear, just buy this, walk away, and never, forget about it, buy it and forget about it, and it's a clean uptrend. No. I started trading in the 90s. Every bull and bear market that I've experienced, not just the ones I've studied going back 100 plus years, the ones I've lived through and traded through and experienced, have these kind of ugly pullbacks and corrections along the way. And then eventually they end and you get a bear market and then the cycle repeats itself. And Gary's done a great job of keeping you out of the way. When things break, like the 50-day moving average, that's a fact. It's not an opinion. The 21-day crosses below the 50-day. Again, fact, not opinion, in the SMH or the semiconductor index. Again, you can start seeing big stocks that were leading on the way up start to roll over. Then all of a sudden, hey, wait a minute. Things are changing. And then you can get more defensive and you can adjust depending on your style and all that stuff. Everything I say is general in nature. So again, markets under some pressure, markets in a correction. There is a chance we have a little bit of a near-term bounce here. Just my opinion. Again, there's the opinion, not a fact. A little oversold here in the short term. It's end of the month. Unless if we get a big outside, I guess, a negative headline in the Middle East or some kind of outside news event, from my standpoint, we're oversold and probably going to bounce here. The market had a big decline, and we're probably going to bounce. Again, not necessarily we have to bounce. It's just we'll see what happens with Apple, we'll see what happens with Amazon and all the other earnings coming out. But this week, zooming out, the Fed came out and did not raise rates yesterday. People were worried that the Fed was going to raise rates. So the Fed not raising rates, one of the reporters from Reuters called me yesterday and said, hey, what do you think about the Fed and the market and blah, blah. It's pretty much, it's a dovish reaction. The Fed not cutting, they didn't cut rates, but it's as close to cutting as possible. Inflation's above their 2% target. The Fed decided to take no action and do nothing. What are you doing to combat inflation? Zero. Okay, that's dovish as far as the market's concerned. Now, the market sold off heavy yesterday after the press conference, but guess what? Came roaring back and bounced sharply today. And a lot of times it's the next day where you actually see the real reaction come in. That doesn't mean we have to rally tomorrow. It could easily sell off, and there's still lots of areas that are in trouble, so on and so forth. All I'm just saying from my standpoint is there's a chance, depending on earnings and how things go, that we bounce from here. That's all. Doesn't have to. So, a few notes from Gary. Microsoft, Goldman Sachs, Caterpillar, big parts of the Dow. Those three stocks, Microsoft, Goldman Sachs, Caterpillar, are today, and then are big pieces of the puzzle. When you look at Microsoft, it gapped up big on earnings. This is from Gary now. So we think it's viable on any pullback. Microsoft could be bought, but Gary does not own it just yet. Or he hasn't bought it just yet, but he's always wondered about how the stock was down so far before, and the numbers are pretty good. So, and he's mentioned it before on radio throughout the drop. So a stock like Microsoft reports earnings after Wednesday's close. The Fed came out yesterday, didn't do anything. Okay, market sold off. After the close, Microsoft comes out, gaps up today, huge gap on decent numbers. Meta, another one, Facebook, came out and did the opposite, had a big gap down after reporting earnings. Some cross current there. They're big stocks in the NASDAQ 100. Those two. Starbucks, interestingly enough, that's in the NASDAQ 100 as well, I believe, also reported earnings. And that was up a little bit, but not by much. Chipotle, CMG, another big restaurant type stock. Starbucks I consider as a restaurant, but Chipotle, gapped up on earnings today. It was a breakout on Market Terminal today. If you ever want to see breakouts in real time, you can go to marketterminal.com. There's breakouts there. Chipotle gapped up on earnings today. And what happens there? It shows you, folks, when you go through these earnings, there's breakouts and there's breakdowns, and a lot of things are happening. I think there was, about 30 stocks that broke out today, thereabouts. It shows you what's happening and how many are breaking down. All right, up next, we've got a lot more to cover. I'm going to talk earnings, talk the market, and a lot more, GDP, and so on and so forth. Thank you very much for being here. And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, you can go to, let's hear that music. Okay, there we go. Let's see. You can go to GaryK.com, listen live or archive anytime, Monday through Friday. Well, you can listen live or archive anytime you want, but live is Monday through Friday, but archive's available 24/7 on any device for free. All you need is just the internet. All right, so a few things here. We spoke about earnings, lots of earnings, spoke about breakouts, spoke about breakdowns, so I'm going to speak about that now. It's about even today. There was about 30, I think a little bit more breakdowns than breakouts. 28 or so breakouts. We had a little over 30 breakdowns, so it's about even. Sometimes you get a lot wider discrepancy, 80, 30, 40, 50, 60, 70, 80 stocks breaking out, and 5 breaking down on a really bullish day, and it could be the opposite, 30 or 40 breaking down and 2 or 3 breaking out, or 5 breaking out on the bullish days, on the bearish days, excuse me. So I look at that ratio of breakouts to breakdowns. I always like to say the market is speaking and then ask, are you listening? And that's how I listen. It's not verbally speaking to us like I'm speaking to you now using words. The market's speaking non-verbally, which interestingly enough, you can Google it. I didn't know this, but someone told me and I was surprised. Most of human communication is nonverbal. See someone's face, are they smiling or not? That kind of thing. So that's earnings are important, right? So market caps are big. Let's look at some sectors. We spoke about the earnings. Let's talk about sectors. One that jumped out at me that Gary mentioned earlier in the day to me was the transportation stocks. Ticker symbol is IYT. Broke the 50-day today. It actually closed just near it on it yesterday, but broke it significantly today. Was in the lower half of the range. We rallied back a little bit, closed in the middle of the range for the bar today, but that's a big break. It's pulling back, somewhat retesting that 83 level, which was resistance. The low today was 83.67, so it's now support. But if it breaks down below 83, no bueno, like they say. It's below the 50-day, so that's not a good sign. Typically, transportation stocks, financials, the XLF is another area to watch, are important to watch, because if they start breaking down, that tells you, hey, the economy could be in trouble. That being said, it's a good segue to talk about the economy. The GDP report came out today, and the PCE inflation report came out today. And GDP, which is a measure of all economic activity, or gross domestic product for the economy, came in below expectations. And that's another big reason why the market's up today, even though futures were up before GDP. But let's just throw in the GDP rally afterwards, the post-GDP rally. GDP came out, and it was weaker than expected, which takes pressure off of the Fed to raise rates. Why? Because if the economy is growing weaker than expected, then inflation is going to naturally slow down. Remember, supply and demand. Demand slows down, then all things being equal, inflation should come down. And that's another reason why the market rallied. And we're still growing, just not growing stronger than expected. So that being said, that was GDP today. Financials, XLF, above the 50-day and above the 21-day, and they just broke out a few days ago. So the financials are fine. Transportation stocks, I want to see it get back above the 50, but it was a break of the 50 nonetheless. Semiconductors, the SMH, broke the 50 a few weeks ago, right around the time the NASDAQ 100, the QQQ, broke the 50. Not exactly, but near. And it's been falling ever since. 50-day moving average, folks, in a healthy environment is sloping higher. And the market or the stock stays above the 50. Doesn't have to, but just in a good, nice, healthy, upward trending environment. Once the 50 breaks, especially if it breaks in heavy volume, typically a sign that, okay, something could be changing. Oftentimes. Doesn't have to, but based on my observation, it's not scientific proof, but I've noticed many times when stock breaks at 50, all right, something has changed here, especially if it doesn't have heavy volume and it continues lower like the SMH did, semiconductors. Not only did you break the 50 with the SMH, you rallied back into it a few days later at the end of, when was it? Not the end, the middle of July into the 22nd of July, and you kind of failed below the 50. And then you rolled right over again into yesterday's sell-off. And then today's big gap up. So, all right, noted, where, like Gary says, noted. Oil prices. Oil prices are higher, even though we had, there's no real resolution in the situation in the Middle East. So we'll see what happens. But for now, that's something I'm going to watch, because if oil prices shoot back up, then that could trigger inflation, which could cause the Fed to either raise rates or not lower rates or whatever, right? Could cause the Fed to do something. But for now, oil prices, well, they ended down about 1% today. So, sorry, let me take that back. I was looking at futures versus something else. But oil futures down, it was 83.66, down about 1%. So oil gave back a little bit of some of the recent move. The big decline today that did catch my attention was gasoline prices, RBOB gasoline. That was down about 4.5%, close to 324. So hopefully we'll see some relief at the pump. If that continues to fall, we'll see. But outside of that, let's see here. What else did I want to share? Some more sectors. So we spoke about the financials, transportations, stocks. Interestingly enough, the regional banks, KRE, that broke out recently on Market Terminal, jumped out at me, and some regional banks. Last Friday's weekend report that I publish on FindLeadingStocks.com, I had a lot of regional banks that showed up there. I was like, oh, wow, all right, noted, right? So like Gary says, caught my attention. What else I want to show you? Biotechs, XBI, bouncing. It had a big run, broke out back in June on the 17th of a nice base. The XBI had a nice rally, and then it pulled right back into the 50-day and bouncing off of it. That's a good example of a pullback into the 50-day and a bounce off the 50-day where it looks good, and you're in an uptrend. So a nice breakout. Old resistance was 139. The low just recently was at 146, so you're above the 139 line. And for all things being equal, could be an emerging area. Regeneron Pharmaceuticals was a breakout today. And Regeneron's a big biotech company. So, and there were others too. There's 31 total breakouts today. Regeneron's a biotech company. What else? ILMN was another breakout. This was a medical, it's more of a healthcare stock. A few other ones broke out today that caught my attention. But again, biotech, something I'm watching right off the 50-day. We'll see what happens there. Speaking of healthcare stocks, let's look at the XLV. That gap down, yes. Let's see here. Where are we? XLV. Make sure I'm looking at the right thing. So that had a good move, the XLV, recently over the last, this is the healthcare stocks, over the last few months since May. We went from 141 up to 170-ish. And now what's happening with the XLV, you're pulling back into that 21-day moving average, and you're nicely above the 50-day. Little gap down today in the XLV. There's a few stocks that reported earnings there that dragged it lower, but still, it's in an uptrend. So looking at the sectors, we'll watch them. Up next, we've got a lot more to cover. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. In case you're just joining us or missed any part of the show, you can go to GaryK.com, rewind, fast forward, listen at your convenience anytime you want. All right, so spoke about earnings, spoke about sectors, could be emerging sectors, could be sectors to watch. A few other ones, gold and silver, GDX is gold and silver stocks. They're just in a correction. You had a huge move Q4 of last year in gold and in silver, and now you're just pulling back. GDX, you can look at GLD, same thing. SLV is silver. Not much is happening. Just a huge pullback to consolidate, to digest the big rally we had in Q4 of last year. Other areas I could share. Let's see here. Well, let's talk about Amazon. So Amazon reported earnings after the close. Stock is up as of right now about 6.29%, around $15 or 6.5%. Let's put it that way. Now it's almost 7. It's very fluid. Just came out. Let's see. Amazon shares jump. No. Let's see. After Q2, AWS, so Amazon Web Services, top estimates. That's the big headline. The free cash flow fell a little bit, but for the 12 months, let's see, to outflow. Yeah, no. The Amazon stock is up after hours. I mean, that's all that matters. How much it's up, it's moving up and down a lot. As I speak, it was up about 7% and then 6 and then 8, so we'll see what happens tomorrow. But good news for Amazon's up after the bell. We'll see what happens with Apple, and more importantly, where we close tomorrow. But for now, other stocks that came out after the bell, Coinbase. Coinbase has earnings. Rivian has earnings. Rivian. Coinbase is down just a little bit, not much. RIVN is Rivian. That's up a little bit. Rivian still sees fiscal year vehicles delivered 65,000 to 70,000. It's up just 20 cents. I mean, not much. Up about, yeah, it's now up 8 cents. So it's all over the place. But up a little bit nonetheless. Roblox reports earnings. Let's see, RBLX. Yeah, it's not much. Up just a little bit. Q2 daily active users rose. Or we'll see what happens there. Sorry, it didn't rise. The stock's up just a little bit, but nothing really mattered. Nothing substantial. And then we'll see what happens with Apple in a few minutes. So for now, I would just take my time. I'm going to watch the NASDAQ 100, the QQQ. Very big chance it's a little near-term low here. That could become a significant low or the low. I'm going to watch 686, which is where the Qs are, with the low back in June. It broke below that. Let's see if it gets back above it. And then watch the 21-day, and then the 50-day. And we'll see what happens over the next few weeks. Because if it rallies into the 21-day, or even the next few days, rallies into and then rolls over, or rallies into the 50-day, rolls over, no bueno, like they say. What is the series, what is the definition, if you had to define an uptrend, take out the emotions and everything, it's just a series of higher highs and higher lows. That's it. I mean, you can go much deeper than that, but really that's what it comes out to. Series of an uptrend is higher highs and higher lows. A downtrend is the exact opposite, lower highs and lower lows. So we'll see what happens. For now, just take it one day at a time. There's no rush. Reddit reported earnings. Let's see here. Down about $6, initially down $7, $5. It's just all over the place. About 3.5%. So Reddit's down after earnings. Let's see, Q3 adjusted EBITDA, 385 to 367. Yeah, it's down. Reddit's down. So let's go back to Amazon. This thing's all over the place. We'll see. Yeah, Amazon's up real nice, and the NASDAQ futures are up nicely because of Amazon. We'll see what happens with Apple. But for now, just take your time. And this is a bounce. Let's see if the bounce continues or if it's just a one-off. Time will tell. But when we're in these corrections, I like to just step back and zoom out and say, okay, let's just pause for a second and look at what matters and measure what matters. I'm very, very aware of the fact that zooming out, like high level, we're in a bull market. I get it. It's just a pullback. If you zoom out, look at all of these indices. The S&P 500 right now is down 2.5% below an all-time high. That's it. It's below the 50-day, not good. Below the 21-day, not good. Lots of damage under the surface, but it's in a bull market, and you're down 2.5% below an all-time high. Again, it's really important to zoom out and put things in perspective. The NASDAQ 100, with all the selling and breaking the 50-day and going down almost to the 200-day, it's about 9% below its all-time high. Again, folks, and it just went from 555 to 748, almost 750. So it had a huge move. It's pausing to consolidate that move. The Dow is 2% below its all-time high. The Russell 2000 is up 17% for the year, and it's down 3.3% below its all-time high. So again, Just it's important to put things in perspective. Pullbacks happen, they're ugly. Corrections happen, they're ugly. They happen. It's part of the process. Now, market speaking, let's listen. So I'm on market terminal. Let's go through some breakouts. And again, these are not buy recommendations. There are no investment advice is given. Everything is just informational, general informational purposes only. That being said, few stocks that jumped out at me today. Chipotle, CMG, broke out. JLL, Jones Lang LaSalle, it's a real estate company, broke out. Lloyd's Banking Group, Lloyd's of London, it's a regional bank. LYG broke out today. And again, I'm not going through and saying to buy any of these. I just want to see what's breaking out. Regeneron Pharmaceuticals, REGN, nice breakout there. Spoke about biotechs. ILMN broke out today. Let's see here. I'll skip that one. Unity Software, U, edged out of a little mid-level base here. Ferrari, ticker symbols RACE. Interesting enough, they broke out even with the tariffs. They broke out today. Shows us demand is still strong. Economy is still strong. BPOP, BPOP. This is Popular Inc. It's a regional bank. Little breakout today. Anheuser-Busch, Bud is this ticker, BUD. Nice little breakout there. Beverage alcoholic company. Market Access, I think I'm pronouncing that right, MKTX, is being bought out by ICE, which is the parent company of the New York Stock Exchange, for $6 billion, I think it is. And I think they have revenue under $1 billion. I think it's like $900 million. So and I think earnings are $300 million. But something they like, and they're paying for it. So I like deals. I love making deals. So good. God bless them. Good for them. Both good for both sides too, by the way. NEOG. In other words, if they agree to the deal, the buyer is willing to buy it, so they see value. Okay, good for them. Hopefully, it's accretive. NEOG. This is Neogen Group, the Corp. It's a healthcare medical diagnostic company. Good breakout there on volume. Let's see, PBF Energy, oil and gas breakout there today. TAL Education Group, TAL, big move there. ORKA, which is Aruka Therapeutics, healthcare, biotech company. Let's see here. Yeah, it's a biotech. Edging out. Not a massive breakout, but nice little breakout. NEU, New Market, chemical company. Nice breakout there. Shoe, Steve Madden Shoes. SHOO is a ticker there. Good action on volume. On earnings, I believe. CVI, CVR Energy, oil and gas, breakout. DNTH, another little breakout, biotech company. ADPT, another biotech breakout. And that's how the market speaks to us. All I did was go to Market Terminal and just click on the breakouts and just go through them with you one by one. TXG, 10X Genomics, another breakout. So again, another biotech healthcare company. As we go through, folks, that's how I start. Next one, SBLK, Star Bulk Carriers, shipping company, broke out today. PFS, Provident Financial Services, broke out today. Regional bank. So right away, go to KRE, right? SHIP, SHIP, Shawn Energy, I think it is, Maritime Holdings, another shipping company, ticker symbols SHIP. Good breakout there on volume, on earnings, I believe. XNCR, good breakout there. It's a base on top of base, biotech company. And you can go on and on and on, but you get the gist of it, right? Fossil broke out today. They make watches, FOSL. So that's how the market speaks, and our job is to listen. Take your time. There's no rush. If this bounce is going to have legs, we'll get a lot more opportunities. And for now, we'll just take it one day at a time. Up next, we've got Apple's earnings and a whole lot more. I'm Adam Sarhan. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. I'm Adam Sarhan, and for Gary Kay, who's out today. All right, so we spoke about a lot with the market, spoke about what's happening, gave you a rundown post-Fed. Let me wait for that music 1 second. Here we go with the music. Hopefully that ends. Okay, here we go. So spoke about the Fed, spoke about GDP, spoke about possibly a near-term low. We're not sure. We'll see what happens. End of the month has an upward bias. Spoke about dovish Fed yesterday. Market initially sold off after the press conference. Well, it rallied after the Fed decision. Then it sold off after the press conference. Ended really weak. And then today had this overnight gap. All right. No news, by the way, the overnight gap. Rates, interest rates, and all that fun stuff moved a little bit, but there's no peace in the Middle East. There's no, huge thing. Microsoft was the big win last night from the earnings standpoint, and Meta fell. And then lots of other stocks reported earnings as well. Today, after the close, one of the big things that I look for when I go into earnings season, what we're in now, and this is Market Terminal has made this really easy for me, marketterminal.com, is extended hours. Like right now, literally right this second, it's after the close, I have an extended hours section. I can see which stocks are breaking out, which stocks are moving up, which stocks are moving down. Same with during the day, by the way. It just takes it to the extended hours. After hours, I have CNO breaking out. CNO is it's an insurance company, financial company, about $5 billion market cap. That's the one big breakout there. As far as breakdowns, I don't have any notable ones. Extended hours movers up. I have Amazon. Now it's up about 9%. MPWR, that's up about 9.4%. And it's sorted by market cap, by the way. GH, Guardian Health, another big mover after hours, up. ALAB, up. NBIS, up nicely. First Solar, FSLR, is up about 4%. Here's Apple's earnings. Let's see what happens with Apple. Q3 iPhone revenues $54 billion versus $53.6, so that beat. Apple's down, interestingly enough. All right, iPhone sales beat, but overall stock initially is down about 2.5%, down about $8 to $326. And again, you can see that in Market Terminal. I've got an orange candle that shows me that that's down. It's interesting. It's just like yesterday where Microsoft was up big and Meta was down. Those are the two big stocks that reported yesterday. Today, it's the exact similar situation. Amazon's up big and and Apple's down a little bit. So we'll see what happens. I believe this is Tim Cook's last quarter, and then the new CEO is going to take over. I'm not 100% sure, but it's down about 2% now, the initial reaction. Still earnings are coming out for Apple, and we'll give it time. Of course, as always, we'll see where it closes tomorrow, because that's what really, really matters here. So again, going through these, the headline is Apple's down and Amazon is up after hours. So going through, there's hundreds of stocks that report earnings on busy days, and sometimes tens, dozens of them that matter. How do I sort it all? I used to have to go through different sources. Everything now is available right there on marketterminal.com, and that's made it really easy for me. I built it. It's my tool. Anyone can try it and use it. There's a free trial. If you like it, stay. If you don't, that's fine too. You can cancel with the free trials. It doesn't cost you anything. But I want to keep things organized. During the day, I like movers. What's moving up? What's moving down? I have it sorted by market cap. After hours, right now, got lots of stocks moving. How do I keep track of everything? So you just go to movers, extended hours. And I can see them. So Roblox, I said it was down just a few percent points. Now it's down about 12% after hours. MTZ, another one that's down about 10% after hours. Stryker Corporation, SYK, down about 9% after hours. Big down candle. GoDaddy, down about 7% after hours. Coinbase, spoke about that earlier. Now it's down about 5.5% after hours. Reddit, down about 5% after hours. Nucor Steel Company, down about 5% after hours, and so on and so forth. Teva Pharmaceuticals, there you go. We were talking about biotech earlier. This is a drug manufacturer, down about 3.7% after hours, and so on and so forth. So I can see stocks that are moving up. I can see stocks that are moving down, and this is how the market speaks. Right now, after hours on Market Terminal, I have 44 stocks that are up after hours and 51 stocks that are down. Slight bias to the downside. Not a huge, overwhelming bias. Think of like a Libra sign, that scale. But this is just a slight bias to the downside after hours. We'll see what happens. Remember, it's market cap that matters. And in order for something to show up on the movers, it has to be up or down more than, I believe it's 3%. But after hours, I still have, it's going to change a little bit, but still have Amazon up nicely. So we'll see what happens tomorrow. We're still way below the 50-day. There's been a lot of damage in the market. There's no rush as far as I'm concerned. We'll see how we close tomorrow. That's going to matter because it's the end of the week and the end of the month. So you can zoom out and look at monthly charts. We have those in the market terminal too. We have quarterly charts and the annual charts also, which I like to look at because to me that matters. It's able to step back and look at the forest, not just the trees. A lot of people focus on the intraday charts. To me, that's just way too close, like myopic. It's too small. I like to zoom out. Some people look at dailies. I look at dailies as well, but really, I want to be aligned with the trend. The weekly charts, monthly charts, quarterly, annual charts, all those are available on Market Terminal. Why? Because that gives me, hey, where's the forest? If I'm looking at the daily chart, it's kind of like looking at the trees, missing the forest. If I look at intraday, it's like looking at the leaves on the trees and missing the trees. At least for Adam. Not to say that everybody's like that, no, but for Adam, that's how I look at it. So I always do best in the weekly time frame, but I check multiple time frames before I place trades because I want to be aligned with the trend. I could have a market going down like what's happening now in the NASDAQ or some of these other indices or tech stocks, whatever. But the S&P is 2.5% below an all-time high and in an uptrend. So again, it puts things in perspective, right? Even the NASDAQ 100 down a lot, ugly action. It's down 8% from an all-time high, 9% from an all-time high. Still, like blip on the radar when you zoom out. So Apple's still down about 2.5%. Something they didn't like there. We'll see. Let's see. Apple third quarter earning EPS was 202 versus 189. Apple set June quarter records for both EPS and cash flow. We'll see. Something happened that they didn't like. The stock's down after hours. We'll see what comes out. I mean, it just came out, so it'll take me some time to go through it. I'll do it after the show. But for now, suffice it to say, even at Mac revenue, that's interesting. 10.35 billion versus the estimate of 8 and change. EPS included 11 cents favorable tariff refund impact. Let's see here. Yeah, that's about it. So, again, take your time. Let's see what happens. I believe that's all the time we have for today. As always, want to thank you very much for being here. This is the one and only Investor's Edge.